The upcoming assembly elections in Haryana and Jammu and Kashmir hold significant weight for the ruling BJP. A potential loss in these states could send ripples through the Indian stock market. Investors are keenly observing these elections as a barometer of the BJP's popularity and its ability to maintain a strong political hold. Any sign of weakness could trigger a wave of uncertainty in the market. This is especially true given the already volatile global landscape. Investors are always wary of political instability. They tend to adopt a cautious approach when faced with potential shifts in power. The outcome of these elections could impact the BJP's ability to implement economic reforms. This adds another layer of complexity for investors seeking clarity and stability. A change in government often brings with it new policies and priorities. This period of transition can create a sense of ambiguity for businesses and investors alike. The market thrives on predictability, and any disruption to the status quo can lead to volatility. It remains to be seen how the electoral outcome will unfold and its subsequent effect on the Indian stock market. Political stability is the bedrock of a thriving economy. When this stability is shaken, it sends tremors through the stock market. The potential losses for the BJP in Haryana and Jammu and Kashmir have sparked concerns about increased political volatility. Investors are apprehensive about how this might translate into policy changes and economic reforms. Uncertainty breeds hesitation, and the stock market thrives on confidence and decisive action. A fragmented political landscape can lead to delays in crucial economic decisions. This lack of clear direction can make investors wary, leading them to pull back from the market. The fear is that political turbulence might overshadow the government's focus on economic growth. This apprehension is further fueled by external factors such as global trade tensions and slowing economic growth worldwide. These global headwinds, coupled with domestic political uncertainties, create a perfect storm for market volatility. It is this interplay of internal and external factors that has investors on edge. The coming weeks will be crucial in determining whether the Indian stock market can weather this storm. The United States, the world's largest economy, is staring at a potential recession. This has sent shockwaves across the globe, with emerging markets like India bracing for the impact. A slowdown in the US economy invariably affects global trade and investment flows. India, being deeply integrated into the global economy, is not immune to this ripple effect. A US recession could lead to a decline in demand for Indian exports. This could further widen India's current account deficit, putting pressure on the Indian rupee. Furthermore, a risk-averse environment in the US could trigger a flight of capital from emerging markets back to safer havens. Foreign institutional investors play a significant role in the Indian stock market. Their withdrawal of funds could lead to a decline in stock prices. The Indian government is acutely aware of these potential risks. It is taking steps to mitigate the impact of a US recession on the Indian economy. However, the interconnectedness of the global economy makes it challenging to completely insulate India from external shocks. Geopolitical tensions, particularly in the Middle East, are casting a long shadow on the global economy. This region, known for its oil reserves, plays a pivotal role in global energy markets. Any unrest in this region has the potential to disrupt oil supplies, leading to price volatility. India, being a major importer of crude oil, is highly susceptible to fluctuations in global oil prices. Rising oil prices directly impact inflation, which can hurt consumer spending and economic growth. The government is closely monitoring the situation in the Middle East. It is exploring ways to diversify its oil import sources to mitigate the risks associated with supply disruptions. However, finding alternative sources of oil quickly is a daunting task. This leaves India vulnerable to the vagaries of geopolitical tensions and their impact on oil prices. The situation is further complicated by the fact that oil-producing nations often use oil as a leverage tool during geopolitical conflicts. This adds another layer of complexity to an already volatile situation.